In this lesson, we're going to talk about how to calculate federal income tax and complete an 8-column worksheet for a merchandise business. But before we get going, it's important to know a couple things. First of all individuals are subject to paying federal income taxes. Unlike a proprietorship, a corporation is a legal entity having most of the rights and obligations of an individual. Thus, the corporation is the only form of a business organization that must pay federal income taxes. Corporations anticipating federal income taxes of $500 or more are required to pay their taxes each quarter. So that would be 4 times a year. That would be in April, June, September, and December. Another thing important with taxes is each tax payment that we're going to have is recorded as a debit to federal income tax expense, and of course a credit to cash. Federal income tax is an expense of a corporation. However, the amount of the tax depends on net income before the tax is recorded, and that's a key point. The amount of tax depends on the net income before the tax is recorded. In order to make adjustments to federal income tax, you must first determine the net income before federal income tax expense can be calculated. So what we have to do is we really need to make sure that we complete all their adjustments, extend the amounts, accept federal income tax expense and income statement to the income statement or balance sheet columns, and then on a separate sheet of paper we're going to total the work to figure out our federal income tax, and then calculate the difference between the income statement debit column and the income statement credit column total, and the difference between these two totals is the net income before federal income tax. So once again, key point on this one is before federal income tax can be determined, all adjustments must be completed on the worksheet, and all amounts except federal income tax expense must be determined to the appropriate columns. So let's go ahead and we'll quickly go through. First thing we want to do is we want to extend all the amounts except, once again, keyword, except federal income tax expense to the appropriate income statement and balance sheet columns. Do not total the columns yet. Okay, so what you're going to do here is you have our income statement, our balance sheet accounts, and remember what goes into the balance sheet accounts. Well, that's assets equals liabilities plus owner's equity, or basically yellow and blue make green. So I put all the green arrows there, and I brought them over to their accordion. And all we're doing, if it's a credit in the trial balance and there is no adjustment, then it's going to be a credit in the balance sheet. If it's a debit in the trial balance and there are no adjustments, it's going to be a debit there. So next we'll bring over our liabilities and our owner's equity, and we'll put them in the appropriate column. We'll do the same thing for our income statement columns. And the income statement is revenue minus expenses, so net income or loss, which will give us net income or loss before taxes. So my orange is going to be my revenue accounts, and my red is going to be my expense accounts. So now that we've done that and we've brought them all forward, the next thing that we want to do is we need to calculate the net income before federal income tax expense. And the key here is this. We are using this is being done on a different sheet, okay? On a separate sheet of paper, we're totaling the income statement columns. So previously, when we moved, after we've brought them over, we noticed that the total of our income statement credit column was $857,714.11. Total of our income statement debit column, or in other words, our expenses, is $678,452.81. Net income before federal income tax was the business made a net income of $179,261.30. So now what we have to do is we have to actually calculate it, and we calculate it using this table. These are called income tax rates, and basically these 5 percentages right there are basically often referred to as tax brackets. So what we need to do is we need to calculate this. So basically on the first $50,000 we pay 15%, on the next $25,000 we pay 25%. So if we were paying we had net income before federal tax of $75,000, we would pay $15,000 on the first 50 and 15% on the first 50,000 and 25% on the next 25,000. So if we want to calculate this, in this case we have $179,261.30. So what we want to do is we're going to take our federal income tax. Well, our first 15,000 was as a rate of 15%. Our tax is $7,500. Our next 25,000 was at 25%, and the tax bracket was 25%. 6,250. Next 25,000 was at 34,000, which will give us 850. Now, if you add 50 plus 25 plus 25, you get to 100,000. If you notice, we have 179,000, and then the fourth amount is basically from the next 100,000. Well, we're not going to go over it, so we're only going to take 79,000 of that at the 39%, and that right there will give us our federal income tax. Now, this is done once again on a separate sheet of paper. Now we're going to go back and we're going to actually go put it onto our worksheet and finish our income statements and balance sheet columns. So if you notice here, we have our worksheet, and once again I just transferred this over from the previous one where our $53,161.91, our total federal income tax due to the federal government. We're going to need to enter it. Well, once again, we have our two accounts. We have federal income tax payable and federal income tax expense. What we're going to do is we're going to take our total federal income tax of $53,161.91, and we're going to enter that as an adjustment into our federal income tax payable. And the reason it's in a payable is because we have not paid the U.S. government it yet, but rather we are setting it aside so that we do have it ready to pay them when the time comes at quarterly. And then the other part is, the matching debit will be the federal income tax expense account in the adjustments column. After we're doing that, then what we're going to do is we're going to total our adjustments column. Now we will total all our adjustments columns. We add up all of our adjustments. We will add up all of our adjustment credits. Our debits will need to equal our credits. Then we'll continue to do the same with our income statement and balance sheet columns. Okay, but first we will extend our items over for federal income tax payable and federal income tax expense. Federal income tax payable is a liability. It'll go into the balance sheet columns as a credit. Federal income tax expense is a expense, and they'll go into the income statement columns. We will then total up our income statement debit columns. We will then total up our income statement credit columns, and then whichever one is larger, we are going to bring all the way down 2 lines, and we're also going to move it to the left. And then what we need to do is we need to take the smaller number, in this case it's the debit total of our income statement column, and we need to subtract it from, in a sense, our credit column number, and the difference is going to be put there. I'm going to do the same thing with my balance sheet column. I'm going to total up my balance sheet debit column. I'm then going to total up my balance sheet credit column, and then whichever one is larger, I'm going to bring all the way down to 2 lines, and I'm going to then take the smaller number and subtract it from the larger number, and I'm going to get the difference. In this case, we have what is technically called a net income after taxes, and that's what we will actually label this. Now the key thing here is this, is when you figure out the income tax, do it on a separate sheet of paper, then go finish the worksheet. And a lot of times people have problems with that because they want to put it right on the worksheet. But that calculates our net income after federal income tax. So then we need to then worry about how to finish the worksheet. And this is just kind of a review. And the way you finish a worksheet is, the first thing is you calculate the amount of federal income tax expense adjustment. And you can see that here. So we have our federal income tax expense. Next thing we're going to want to do is total and rule the adjustments column. Okay, and once again, if you notice, in our adjustments column, the debits have to equal the credits, always. Then what we're going to do after that is we're going to extend our accounts balances. So then you're going to see real quick that basically the federal income tax payable is going to go to our balance sheet, because at this point everything else has been extended except these 2 accounts. Also the federal income tax expense will also be expended to the debit income statement column. Then to complete the worksheet, ultimately what we're going to do is we're going to total the income statement and balance sheet columns. Now you will notice when you do total them that the debits don't equal the credits, and that's okay because we are ultimately trying to find net income or net loss, and so they won't equal. But once we calculate and enter the net income after federal income tax, which is ultimately our 803, in this case $80,313.95, that will make our debits equal our credits. And if you look at the bottom, our income statement column totals do equal each other, and our balance sheet column totals also do equal each other as well. We'll rule double lines, and then ultimately we will be completed with that. Just kind of a quick little review too, looking at a worksheet. If you notice here, this is what a completed worksheet should look at. If you notice in the bottom right hand corner, you'll notice that there is a gap in between. That is basically signifying a net income. If this 803 80,000 was next to each other in here, that would be considered a net loss in that case. So just to kind of quickly review, what you want to do is you always want to figure out the trial balance, get those entered in right away. Next thing you want to do is make the according adjustments and enter them in the according accounts. Then you're going to want to extend the adjusted balances, and after you extend the adjusted balances, you're going to want to total, prove, and rule the various columns and make sure that the debits equal the credits. These are important here. Then you're going to extend your balances to the respective balance sheets and income statements. Remind you, the balance sheets are assets, liabilities, and owner's equities. The income statements is revenue and expenses. And then you're going to calculate net income, total, prove, and